the economy, the Federal Reserve announced an emergency rate cut late Sunday evening. With the target rate being slashed all the way to zero, Federal Reserve Chairman Jerome Powell stated that he expects it to have a significant effect on economic activity in the near term, but declining to comment on a possible recession to hit the economy. In addition to the rate cuts, the Fed also announced it will be purchasing $700 billion worth of Treasury bonds and mortgage-backed securities, as well as striking a deal with 5 other foreign central banks that will see them lowering their rates on currency swaps in a bid to keep the international banking system functioning normally. This move will make borrowing US dollars cheaper for banks around the world as the leading safe haven currency to buy into at times of crisis. The central banks want to ensure currency markets have easy access to USD. But still, as of Monday morning, it appears the Fed's emergency overnight actions have done little, if the opposite, to settle the jittery nerves of market investors. At Monday's opening bell, circuit breakers were again tripped on Wall Street when the Dow plunged 7%, the S&P 6.5%, and the NASDAQ a similar loss of 6.6%. Almost nothing is left unscathed, oil taking another 10% dive over the continued price war, and even precious metals, such as gold and platinum, are continuing to bleed out today. Over in cryptocurrency land, Bitcoin had a volatile morning, diving in tandem with global markets, which saw it dip as low as 4,400 before experiencing a nice bounce back to the 5.1K range, where we are currently rejecting from, again in tandem with traditional markets. Altcoins are, of course, a sea of red, with the majority of coins posting double-digit losses and continuing. But this afternoon, we'll break down the fundamentals and the technicals of Bitcoin, as well as global markets, and look for opportunities that others are afraid to find. Today in Breaking Bitcoin.
Hello everyone, my name is Silvio Micali. I'm the founder of Algorand, and I'm proud and happy to be here with this edition of Breaking Bitcoin.
Welcome to Breaking Bitcoin, recorded live Monday, March 16th, 2020 from the self-quarantine zone here at the Kraken Cryptocurrency headquarters. This is your daily source for everything. I always say everything's markets and finance. We are broadcasting live to YouTube, Twitch, DLive, Facebook Live, and on television, if you have the Investor News Channel app. If you're watching on YouTube, make sure to subscribe and turn on all notifications, hit the thumbs up button, and leave a comment down below following the show, letting us know what you've learned today. Also, if you guys want exclusive content, make sure to follow us on Instagram and Twitter, because we do post exclusive content there every single day. If you have any questions, drop them in the live chat. The moderators will direct my attention to them. We do a Q&A section at the end of every show. So we've got a lot to cover today. I want to get kind of right over to the charts. Let me make one quick modification here. And today, we're going to start off the show by talking about a little bit more in depth of what I've come to understand over the weekend. So digging into this, looking at the order book data, kind of polling the community and just looking at all the facts. I want to pull everyone's attention to this. This is exactly what I talked about last night in my market analysis that went out to our premium members. And so I'm going to cover it again today for the whole community. But I want to pull everyone's attention to this. And as I research more, my speculation into what caused the Bitcoin marketplace to crash to $3,000 levels. Now, again, the movement down from 5 to 7, let's just start at the beginning. In short, it seems to be BitMEX. Now, I want to preface this with the idea that this is not my official statement on the event. I'm still researching this. I'm looking at all the order book data. My team is looking at the data, and I'm waiting to hear more analyst consensus. But the facts do appear to be emerging as thus. Now, of course, there was indeed genuine selling pressure that came in on Friday that did push the market down to $5,000 levels. Now, an immense amount of long stop losses were subsequently triggered on BitMEX and all exchanges, but particularly on BitMEX with the most volume, on that descent, on the move down from 7,000 to 5,000. And the BitMEX liquidation engine was unable to liquidate positions quickly enough to allow regular market dynamics to stabilize Bitcoin's price or to find or for accurate price discovery to commence. And as a result, the liquidation engine continued to relentlessly sell onto resting limit orders and new market orders to the buy side to liquidate resting liquidations still sitting in the engine. And as a result, price continued to plummet below 5,000. Once price fell below 5,000, the amount of liquidations resting in the engine outweighed the resting buy orders at a factor of 11 to 1 at the height, meaning there was 11 times more liquidations to unload onto new longs entering the market than there was buy volume. So buying pressure was unable to move price up as the liquidation engine continued to unload onto the market. And it seems, what we understand now, it seems that BitMEX manually turned off the liquidation engine and disabled their website. Now, they claim that this went down due to a coordinated DDoS attack. This is what they said that night. We now have a new statement from BitMEX CTO coming out yesterday evening that he says that they claim that this was the result of a slow botnet attack. Now, again, this could be true, but either way, what we do know is that the market was tanking. The market tanked below 5,000 with the liquidation engine outweighing the amount of buy volume. And all of a sudden, once BitMEX went down, the moment it went down, the market recovered 40% in 90 minutes. Price moved up 40% in 90 minutes the second that BitMEX went down. Now, it appears that either the botnet attack pushed BitMEX offline and it came back online. The speculation is that they turned the engine off manually and disabled the website and turned their engine back on after the market had risen 40%. And once BitMEX went back online, the market dumped 12% in the following 9 minutes, and about 4 hours later, another 15%. Now, the evidence would suggest that this was not the liquidation engine acting naturally and potentially was self-directed by BitMEX itself. And the BitMEX insurance fund lost nearly nothing during the crash, whereas Deribit, which suffered its own problems on Friday, liquidated their entire insurance fund and topped it up from their own coffers. We are unlikely to see from BitMEX. So in summary, the crash from 7,000 to 5,000 was organic and a very painful sell-off for many investors. However, the insanity below 5,000 seems to be due to BitMEX ceasing to function as an actual exchange, shoving the weight of liquidations down onto the market. All bots programmed to watch the BitMEX price continue this cascading effect on other exchanges as well, resulting in what I can only describe as order book chaos. Had BitMEX not turned off its liquidation engine, or had BitMEX not gone offline, it is quite possible that we could have seen price crash below 1,000, maybe even lower. It was the right move, again, whether they manually turned it off or whether it was turned off, but it highlights the same problems I've been calling BitMEX out on for about a year, and why I don't actually trade XBT there. I trade on Bybit. Now, again, as I said, BitMEX has responded, official response, not from Arthur or from the official account, but from their CTO, responding that they were taken down from a successful botnet attack. This coming, as I said, from their CTO. He posted yesterday about this situation. Again, my point here is not really to point the blame at BitMEX or to fan the flames of fan the flames of conspiracy theory. That's not really the point here. Again, it doesn't matter if they manually turned the liquidation engine off and disabled their website, or if they were successfully taken down. The sell-off was organic. Somebody legitimately sold. Obviously, the market wanted to sell. The market's in a panic. Everything is tanking. So to lay the crash at the feet of anybody is silly and ridiculous. That's not the reality. My point here is to highlight the idea that the derivatives markets have a massive impact on Bitcoin's price. So for those that don't follow derivatives markets, they are missing out. They're not going to have as much success as they could if they did not follow derivatives markets. The point that below 5,000, particularly on BitMEX, the Bitcoin marketplace ceased to function as a rational marketplace. Once BitMEX went offline, we went up 40%. So again, I'm going to do more research on this. I just want to give you guys what I seem to know so far. I want to thank Low Strife. He made an excellent readable Twitter thread on Twitter that you guys can go. You can just go search for Low Strife. He's on there. I'll put the link down in the description after the show's done. I'm not going to put it there right now. I'd have to stop streaming. So that's things to consider, things to talk about. Now, with that being said, let's go take a look at Bitcoin's price. We'll come back to the wide scene here in just a little bit, and we'll talk about some things. Now, here we are on the monthly time frame here for Bitcoin. Now, the monthly candle, of course, is yet to close. We have 15 days and 7 hours until the monthly candle closes. And the other reason that I wanted to highlight those things out is because I wanted to talk about, again, specific price levels can only ever be good approximations. But I wanted to bring this back because I thought that was important. As we can see, price has come down and touched the 55 exponential moving average. Here we are right here on the monthly 55 MIMA, or monthly exponential moving average, currently trading below it. So I want to talk about a few things here. Let's not understate the situation that we're in. Okay, guys? The markets globally are in turmoil and panic, and we haven't really seen anything like this for quite some time. Okay, we haven't really seen anything like this in quite some time. So I want to speak to the perspective of long-term investors, and I want to speak to the perspective of traders, because they are quite different, right? The actions that I'm taking as a trader are different from the actions that I would take as a long-term investor. Again, as I've talked about, let's just talk about the way that I personally segregate capital. I have long-term holding funds in a ledger. This includes Bitcoin and altcoins, right? And those funds don't get touched, right? Because those investments were made with the fundamental belief that these values would go up, okay? And this is regardless of whether we're talking about altcoin portfolios or cryptocurrency or Bitcoin underlying spot holdings, right? And again, I think that that is very important. So I want to speak to the perspective of long-term investors first as we kind of look at where we are in price. When you go to the supermarket, let's try that again. When you go to the supermarket and you see eggs on sale, okay? You don't say to yourself, oh my God, these eggs were twice as much last week. I'm such an idiot for buying the top on eggs. God, I'm never going to buy eggs again. In fact, I should sell the eggs I bought last week at this price. Never touching eggs again. You don't think that. You never think that. You think, wow, these eggs are really cheap. They're on sale. I should stock up on eggs at this price because they're likely to be regular price next week. They're likely to go up in value later. So I'll stock up now. So, it's always funny to me why people don't think the same way about their investments. And the reason is clear. The reason is obvious why people don't think the same way about their investments. Because when we're talking about eggs, it's a smaller amount of money. But the amount of money doesn't really matter. It should be the percentages that matter. It's typically due to the emotional pain that people see because they're looking at their investments more frequently and they're seeing the value go down. And that can cause them to question the fundamentals of why they made their investment in the first place, right? So let's be frank here. There's nothing about any of these situations that invalidates Bitcoin's fundamental value proposition. If anything, what we're seeing with the response from the federal government, what we're seeing with the response from governments worldwide in quantitative easing, in cutting interest rates, what this sets us up for, I want to be very clear about this. This sets us up for massive inflation. And let's not forget that the Federal Reserve has been wrong about almost every significant economic impact. They told us back in 2008, before the crash, that the subprime mortgage crisis was contained. They told us that before the markets crashed. They told us back in 1999 through 2000, 1999 that the tech, that there was no tech bubble. In fact, they contributed to the tech bubble. So all of these, the Fed has been wrong about almost every massive or major economic event that's ever occurred. And we have to also understand that they're not, all they can do is inject capital into the markets, right? All they can do is inject capital into the market. So for long-term investors, again, I'll be very, very clear and concise on this, right? I'll be very consistent because we do our best on this channel, on the show. Many people come and watch us from all over the world. And this is a time when many people are looking at their portfolios and looking at the charts and feeling fear and panic and worry, particularly all across the world, as we see a lot of scary things happen. Right? You're seeing people fighting in supermarkets over toilet paper. Everybody seems to have adopted the mindset of prepping. You're hearing everything from insane conspiracy theories to, it's just a flu, bro, all over the place. People are obviously worried about the health impact of what's going on with the pandemic. People are obviously worried about the financial impact as governments around the world seem to take very restrictive measures right now, which again, I think is not a bad thing when we talk in the lens of restricting, trying to flatten the curve on the pandemic. Again, we're seeing social events close down. Here in my state, they have shut schools down. They are restricting access to things like public theaters, nightclubs, restaurants, all of these things. And these measures might get worse or more restrictive or more punitive, right? There are people worried about things like martial law, interstate travel restriction. All of these things are possibilities, right? And what that means for the average working person, the average person, is that your income is most likely going to significantly go down, if not be decimated in the short term. Okay. If you're not able to go to work and collect a paycheck, you're going to have far less disposable income to spend on goods and services, right? And I don't really think that the government response to any of these things will be sufficient, okay? So in the short term, again, people are looking at painful situations going forward. Again, those that have been prepared for this, again, key things that we talk about just as standard human stuff is having an emergency fund on the side, is making sure that you have enough disposable income set aside that you do not touch to cover your cost of living for 2 to 3 months. That will allow you to get through situations like these. And overall, I think that people are going to feel the pain as we continue to move forward. And markets will react somewhat independently of that. It's often the case that markets will find their bottom and then start beginning their appreciation before, well before regular people are out of the pain zone. Again, here in America, it was only in the last few years that we started to feel the impact economically, average citizens, of an up market. Right? People saying that, obviously noticing that unemployment was down. People noticing that they were able to purchase a good amount of goods and services for their price per dollar, even with the cost of even with inflation going up. So it's only in the last few years that we've actually kind of seen the recovery from the 2008 crash. And here we go again. So, and again, markets are likely to find their bottom well before and for a long time before people actually feel the impact of being in an up economy, right? So, I definitely don't want to call any bottoms here. I do feel that it's likely to get worse before it gets better. We'll go over the technicals and we'll look at some things that are likely to occur here. We'll talk about some important areas here. But for long-term investors, the eggs analogy holds very true. The eggs analogy holds very true. You buy the things that you feel are valuable moving forward. And as I said, for individuals that have no position in Bitcoin, or for individuals that are sitting on the sidelines with Bitcoin, when we talk about very low leveraged, 1x, 2x, to spot positions, I think this is a good time to dollar cost average into a position, right? I've been very consistent on that, and I will continue to be very consistent upon that, because it seems very unlikely, even with negative downside potential, that we do not see a Bitcoin price appreciation in the future. There's nobody here in the ecosystem, at least that I'm aware of, and I think that I would certainly not be in that camp, that feels like Bitcoin will not be valued higher in 1 year or 2 years. I think that's a silly proposition. I really do. And so again, it's times like these that can be difficult, especially for newer investors. I think there's probably a lot of newer investors I know there's a lot of newer investors in cryptocurrency that have never really held an asset. And again, Bitcoin as a commodity, or excuse me, Bitcoin as a currency has never gone through a situation like this. However, with the way that things are evolving right now, with quantitative easing becoming a reality, QE4, it's really QE5, becoming a reality again, and with inflation going to rise, and with traditional markets falling to the downside. Right now, Bitcoin is a correlated asset. When inflation begins to kick in and money starts to flow out of the dollar, if money starts to flow out of the dollar, it has to go somewhere, right? I don't think Satoshi Nakamoto himself could have set the stage for a macro bullish situation for Bitcoin, such as what we're going to be moving into over the next few years. Now, in the long run, I think that we will be just fine. I've been consistent on that, right? If we look across the pond right now, far across the pond from the vantage point of America, we can see that China's economy is slowly coming back online. South Korea, it seems, has flattened the curve, and the number of infections are not rising. And we see that from other East Asian countries that closed their borders or implemented swift reactions to this, right? Places like Singapore, places like South Korea. But even in China, where it seems, and again, regardless of if we trust China's reporting or not on the actual levels of infection, we can look at other Southeast Asian countries or East Asian countries that are a little bit more legitimate, South Korea, Singapore, and again, their numbers are flattening. So I think this is overall good. Now, Europe was relatively slow to enact measures. One could argue that America has been a little slow to enact measures, but we're getting fairly extreme now. And the difference here is that we haven't seen a very high death toll here in America. So it's possible that we have taken some significant measures here to flatten the curve. And I think this is overall a good thing. So again, as far as the pandemic goes, we will have to go through it. However long it's going to take for this thing to sort itself out, for the majority of people who are going to get infected with it to be infected and seek treatment or not. And that can last anywhere from 3 to 6 months, potentially longer. Do I think that this is going to consume the world in a black hole of chaos and misery? No, I don't. I think that's silly, right? I've been very consistent upon that as well. This is a very tragic event, a very unfortunate event, and an event that we are all facing together as a community, as investors, as traders, as speculators. And it's events like these, let's be very, very clear here. It's events like these that you can either choose to take advantage of, because at the end of the day, you can only take the best possible precautions and do the best to set yourself, your family, your society, specifically talking about taking care of you and your family first, up for the best possible situation that you can be in. This is helped by having an emergency fund that you can rely on and using this opportunity, to strengthen the bonds with your family. A lot of individuals are going to be working from home. A lot of individuals are going to be working from home voluntarily or involuntarily, either because their company has forced them to work from home or because they don't have a work to go to temporarily, because it's possibly we see some companies take breaks and take some time off, and even see some companies shutter and close. This is going to be a reality. But this is a fantastic opportunity to emerge from this situation a better person, a better investor, a better trader. Particularly if you are at home and if this is something that you are passionate about, learning to become a better investor, learning to become a better trader. Situations like these and opportunities like these where you are essentially forced to have nothing but time on your hands. So let me give you guys an analogy. Over on Twitter, I'm seeing traders that people think are amazing talk about what video games they're going to play during their quarantine lockdown. Whereas my team is working on how many pine strategies can we get written while we're at home working? How many trading strategies can we write? How much research can we do? Other individuals that I'm talking to, what language can I learn while I have downtime, right? Cambridge University shut down due to the plague. And during self-quarantine, due to that plague outbreak, Isaac Newton taught himself calculus, and it was on his self-quarantine that he saw a tree fall, or excuse me, not a tree fall, but an apple fall from a tree in his garden, which inspired him to write his law of universal gravitation, right? Plague broke out in England during Shakespeare's time, and theaters were closed. Public theaters were closed. And while on break from the theater, because he didn't have any job opportunities, he resorted to poetry, and he wrote King Lear, Macbeth, Antony and Cleopatra. So the question here is, how are you going to emerge from this crisis? Are you going to bunker down and scream at the sky and blame other people? That doesn't seem very productive. Or are you going to utilize this opportunity to learn, to build? For people in the group, right? You guys have a fantastic opportunity to take advantage of this educational material, to sit down and build your strategy so that you are set for either the next cryptocurrency bull market or the next traditional market bull market, traditional market bull run, or the next, or to trade Forex, or to trade ETFs or CFDs, or whatever market that you want, because these lessons are applicable to all markets. These systems are applicable to all markets. And I really encourage individuals to take advantage of the time and the opportunity laid at their feet. So I want to go back to the charts here and talk about a few things. Now, we have some important levels. Now, although we are seeing Bitcoin being highly correlated to traditional markets, I mean highly correlated, right? And we'll talk about my setup some more. I'm currently sitting with Bitcoin here in just a second. Although we're currently seeing Bitcoin be highly correlated to traditional markets, we always want to be on the lookout for this to diverge at some point in time. And so let's look at a few important monthly levels here. The monthly 55 exponential moving average, currently sitting at 52.94. A monthly close above this level would be a positive sign. All right. Now, if we go back to 2018, now we did struggle with this level for about 4 months. We closed above it right here in December of 2018. We consolidated below it for a month and slightly above it for a month. And then we ended up breaking up here on the March close, but it wasn't really until April 1st where we got that massive movement up from 4K to almost 6K, consolidated at those levels. really 5K, and consolidated at those levels, excuse me. And then again, that was kind of if we look at the weekly chart and at the daily chart, that's when all of our trending signals started printing. So my advice, just in general, right? But we'll get to this here in a little bit, but calling bottoms is not very practical, right? If you go to Twitter right now, or if you go look at any other analyst who's talking about Bitcoin's price, they are going to try to convince you that they have some form of analysis that will tell you where the bottom is. And I can, we can do the same thing on the show, right? We can talk about these moving averages. We can pull up VPVR and say, well, hey, look where the bottom of that candle is at that high volume node. So that is clearly the bottom. And if we retest that level, that'll be the bottom. Or if we swing failure pattern below this level or that level, listen, technical analysis does not work that way. It is not voodoo. It is not reading the tea leaves. Technical analysis lets you know when there are setups that are probable to succeed when you are trading in the correct direction based on your fundamental bias or based on your directional bias coming from your technical indicator set, right? This is the way that we trade, right? We trade in the direction of the trend. We are trend following traders by nature, and we look for signals that tell us when the patterns are correct. All trading with indicators is the same thing as manual trading. It's pattern recognition. We just use indicators to tell us objectively when the patterns are in sync. Right? This is the same pattern that's occurred before, and it has this probability of success. It's the same pattern as this that occurred before. It has this probability of success. That's what objective systems trading is, right? It is trading with a system that you can build statistics around. Technical analysis cannot and will not tell you exactly where the top will be, exactly where the bottom will be, where price will go here, where price will go there. You will see people post charts where they occasionally get these things right? They do, it is impossible to get them right all the time. There is no such thing as a magical trading strategy or a magical system or a magical indicator that will tell you where the bottom is, particularly when we are in a highly emotional market state with traditional markets and even with cryptocurrency, with all markets across the world. People are not acting rationally in the supermarkets, and people are not acting rationally in the markets, and it is unclear how we will see this play out in the short term. Right? In the long term, again, this is why long-term investors generally prosper when they practice buy and hold strategies, because they simply, dollar cost average into dips and they wait for price to go up, and they buy things that are fundamentally valuable, whether that be things like Bitcoin, whether that be things like blue chip stocks, whether that be things like commodities, again, or precious metals, excuse me. So all of these things. So again, I'm not going to claim that the Bitcoin bottom is in, particularly when we are in a bearish trend. When we are in a bearish trend, it is likely to continue to move down. Okay? It's likely to continue to move down. Now, we'll look at some levels here. Again, obviously, we do see a lot of liquidity that came in. This obviously is where price turned around, and we had bids filled there. The low on the current monthly candle is 38.50, right? So again, an area to watch for, the high 3,000s, the mid 3,000s for consolidation. Now, let's talk about more downside targets. Well, let's be very, very clear here. Do I see price below 2,000? No, I think that's silly. Could I see price going down and reconsolidating in levels where we've already consolidated in the 3,000s? Yes, it's happened before. It could happen again. And going down to those levels doesn't break, again, a fundamental value proposition. Price doesn't necessarily break fundamental value propositions. And it also doesn't invalidate the trend. The trend is bearish. Profitable setups are to trade. And this is what I've been consistent in for those who read my analysis that I put out every single night. Again, irrespective of the positions that I may take personally, the correct analysis here is to look for shorting opportunities. When the daily trend is bearish, you have a couple options. You can either wait for daily signals, which is the best thing to do, or you can go down to lower time frames and look for opportunities to re-enter in the direction of the trend. These are typically going to come in overbought opportunities or taking trending signals on those lower time frames, right? So when price comes up, you short. When price is bearish, when price is bullish, you wait for price to go down and you long it. This is just very standard and typical stuff. So I guess the follow through of that is you should not worry about buying the bottom on Bitcoin, because buying the bottom doesn't matter and it's likely to cause you more pain than good. what you want to do is you want to wait for a situation like we saw back in 2019, like we saw in 2016, and like we just saw actually earlier this year, which actually made a very good long setup. If you see consolidation after a long move into the downside, you wait and you buy the breakout, you buy the initiation of a long trend on a strong candle to the upside, right? After protracted consolidation, after a long move into the downside, it is very rare that a large candle on high volume fails instantaneously, right? You wait for the candle close, and we can see that on daily timeframes, on weekly timeframes, here on monthly timeframes. And so again, we can see here that buying into Bitcoin on the close of the April monthly candle was not a bad idea, just as buying the close of the first April candle in 2019 was not a bad idea. That was strong signaling to you that the trend has reversed, the lows are in. So for me, if I can see us reclaim the 55 monthly exponential moving average, or roughly this high volume node that we're currently trading in right now, if I can see us hold this level and appreciate to the upside, then again, on high volume and strong candles on higher time frames, that to me will signify that the bottom is in. As price is continuing to move down, there's really no fundamental signal here that the bottom is in. And I think that's what people need to be watching for, right? Now, again, if you have a successful lower time frame or scalping strategy, all the pleasure to you. This is a fantastic opportunity for those who are not worried about USD value and consider their long-term holds as good, kind of the value proposition on Bitcoin as in, to accumulate Bitcoin, right? To stack sats. I think that's a fantastic opportunity to do that. But there's going to be a larger majority of people where that's not really tenable to them. And looking at the USD value of that Bitcoin is still too painful to watch drop. And because of that, I think that for those individuals, even at these price levels, I'm not advocating that you sell the bottom. For your long-term holds, I will never advocate that. I think it doesn't matter where you bought Bitcoin, you should not sell it if you considered it a long-term investment. If you bought something to be a long-term investment, it's a long-term investment. And you can certainly average into a better position, but going all in at any one price level is never a good idea. Often people who say, well, I bought the top, what they really mean to say is I went all in at the top and I have no more income on the side to buy dips down, right? The best way to build a spot position or a long position or a long-term investment position is to dollar cost average, period. It always has been. It doesn't matter what market it is. You dollar cost average. You buy the same amount every week. You buy the same amount every month, irrespective of where price is, and you get a good average entry. And that strategy over time helps reduce market volatility, even with things like Bitcoin. So holding a level like the monthly 55 exponential, So for those individuals that cannot, kind of stand the pain of watching the USD values for their trading portfolio, again, just as I officially recommend in the group now, if you're new to trading and you are just building your system, the safest thing for you to do is sit in USD and buy Bitcoin as necessary for long trades, right? Or buy Bitcoin as necessary to take short positions, right? Again, even on Bybit, you can move into US dollar tether now, and you can do that on most major exchanges. Whether you're using Kraken, you can sit in actual USD. In Bybit, you can sit in, on Bybit, you can sit in USDT. On Binance Margin, you can sit in USDT. And again, that's going to come down to your risk appetite and exactly how to do that. But if you're new to trading, again, I think the best thing to do is not sit with your trading capital in BTC, but in USD or USDT, right? And then as you become more proficient in trading and you have implemented a hedging strategy, as I talk about, then you can sit in BTC and manage your risk with hedge shorts using futures contracts, which is how I trade. All right, so again, overall, if you want to know when the bottom's in, it's when we get a large move into the upside. Now let's go look at the weekly time frame. Now let's look at some concerning things here. The same thing that I talked about, I was looking at the weekly 200 moving average here. The weekly 200 simple moving average. Let's make sure that it is the 200 and not the 200 EMA. Okay, good. We do have the 200 small pulled up. Currently sitting at 55.2652. We have closed the weekly below that level. We were watching this last night. I was looking to how the markets would behave, and we'll go look at the lower time frames and how the markets kind of behaved earlier today. But we have closed below that level and seen some selling pressure. Again, pulling up a little bit, but we have seen some selling pressure. And on the weekly time frames, you can see, let's make sure that we put our VPVR in the right place. I always measure from the same place on the logarithmic time scale. as you guys can see, we are struggling to hold the current high volume node that we are in, right? And so daily closes here really below, in my opinion, 52, but daily closes below 49 are going to be concerning because that's going to be putting us into low volume node territory after we've already tested it on intraday trading basis here. Weekly time frame, and again, this weekly just opened up, but tests below 5,000 kind of on an intraday level are fine. Significant closes on the daily or higher are really concerning. And I think that should that occur, it seems more likely that we go to the next level of liquidity, which as indicated by the sell-off, obviously rests in the $3,000 area, okay? So until we are closing above significant now support turn resistance, until we are closing above significant levels, in my opinion, the baseline, right? We'll go actually look at my trading strategy here in just a second. In my opinion, the baseline, the trend is bearish, guys. And so I'm going to recommend, as I always would, that if we're below the daily baseline, I've been consistent on this for a long time, hedging or sit in cash, hedging or sit in cash below the daily baseline. So let's go look at where the weekly baseline is. We covered this when it happened. We're going to change our length to 30 here. So we closed, let's get zoomed in here. We closed below the weekly baseline over here on the 2nd of March, indicating weekly hedges were in order. Anybody who did that or sat in cash can currently buy almost 40% more Bitcoin than they could with that same amount of money, or would be up 40% in BTC had they currently holding their weekly shorts. Now, we need to close above 84.60 to invalidate that position. And over time, this weekly baseline will move down. You know, something that I do want to point out here is that I do think, unfortunately, guys, a V-bottom reversal here is almost certainly unlikely to happen, right? A lot of money has flown out of BTC. A lot of cash value has flown out of BTC because cash is king currently. People want to have disposable money on hand to purchase goods and services, especially with concerns that they will not be able to purchase goods and services due to the pandemic having effects on things like supply chains, due to the pandemic having effect on things like grocery markets and all of things like this. So cash is currently king and people want disposable income. So unless you can convince a lot of people to buy into BTC, then I think that it's unlikely for price to V-bottom up out of this. Again, almost what is certainly to happen at this stage is we are likely to consolidate for quite a while. And then again, what is your signal that the bottom is in? A movement to the upside on high volume, on strong volume, and a strong candle close on a daily basis or weekly basis. That's a good signal. That's a good signal. You don't need to be like the noobs who wait until Bitcoin is back above 14,000. You just wait for a good, strong daily signal, right? Let's say we do consolidate down at 3.8. Well, let's just look exactly what happened back here, right? Again, just a trading strategy, guys. Now, obviously, the breaking Bitcoin system would have told us to go long in February when we actually break the cycle, or to consider going long. And then when do we get confirmation? We do get weekly confirmation over here on the 2nd week of April, okay? So again, even a weekly trending strategy would have missed out on this big initial move, right? Which was a lot, but it sets you up for this. It sets you up for an 84% move. You can see that's when we close below the weekly baseline for the first time. Sets you up for an 84% move, okay? And it had you out of this, had you in back here, obviously, when we just recently got back in. Here's the exit signal, still sets you up for about a 2% gain right there, about a 3% gain, so not the biggest trade right there. Obviously, the daily, we got far more yield out of that, and then got you in for this current weekly hedge. Or even short signal potentially, but not really. Yeah, actually it was a confirmed with WADA and breaking Bitcoin. With the Mink system, not until over here. And that's an overextended signal. So let's go to the daily time frame. All right, this is the time frame that we actually trade. The daily time frame, we are bearish. We are bearish. We are bearish until we close above 75.54, right? That moving average will continue to move down and qualify price levels. Shorts are invalidated on a daily close above 58.67, putting us in a no trade zone. Until we close above 75.54, if you're very aggressive, that's the level where you could close your hedges, but you want to make sure that you put them back on should we close back below that level. Again, be very clear here. This is exactly what happened over here. This is exactly what happened over here, okay? Let's talk about the continuation filter here. We close We close below here, right? Potentially getting us into a short position, although WADA doesn't confirm, so we don't take this trade. Price moves up and closes above the continuation filter. We actually short. Now, I actually discretionarily shorted this move. This was a reversal baseline bounce setup, so I actually did short this move. But let's say you're not trading reversal baseline bounces, which is an advanced concept and technique that we teach. Let's say you're just using trending systems. Okay, so you close below your baseline. Now, the continuation filter, most people don't have. I have a continuation filter, but let's just talk about the continuation filter because a lot of people look at the levels that I look at. All right, let's say that you closed your hedge here, right? Close your short, but let's say you also close your hedge. And you take a little bit of a loss. You close back below the continuation filter here. You put your hedge back on and short, potentially, because this is a continuation short on Minx. You hold that position and you exit here, okay? Well, again, if you exit you can tell from throughout this, the trend has been to the downside. Closing your hedge has put you in for a few gains, but not too much, especially the loss you take here. Now, if you don't hedge back up, you'd have eaten a massive loss, okay? So you want to make sure that if you are being more aggressive with also closing your hedge, I know it can be tempting because people want to get that whole Bitcoin impact, but it is safer to wait till price closes above the baseline. That's why I said if you're new to trading and you do not have your hedging strategy 100%, you should be sitting in cash or USDT and buying Bitcoin as necessary for trades. And once you are a profitable trader and you see your results working from a USD perspective, you can begin sitting in Bitcoin more and more and more and utilizing hedges to cover your risk. Okay? It's my official recommendation for all members who enter the group now. Not given a take profit on short signal. It might on the next daily candle. It will, particularly if we can get in a positive close here. Kind of depends on how the daily closes. I would not be too aggressive at looking for daily signals to the upside at this point in time. We currently are trading at 50.45. As I said, a daily close above 58.67 would invalidate shorts and put us in a no trade zone. And we do need to close above 75.54 to regain the bullish trend. WADA is still bearish. Minx is still bearish. However, it has crossed into static from the perspective of the daily time frame, we are in a flat position, hedged. And Parallax is still quite bearish, recovering from oversold conditions. Minx has not yet recovered from oversold conditions. Now, I want to go back out to that weekly time frame. And I want to talk about the $200 weekly exponential, or excuse me, 200 weekly moving average here. As we can see, we did bottom here back in 2018, and we struggled with this for about 6 weeks, but we didn't close below it. And we have closed below it now. We have also opened below it. So we'll need to be patient and wait, but this is not a good sign for a long-term price, guys. Not a good sign. On the monthly time frame, again, we can see the same with the 55 MIMA right here. We do struggle with it quite a bit, and I do expect us to struggle with it a little bit more here. Holding the level and then moving up on high volume is the confirmation that the bottom is in, not arbitrarily holding a level to the downside. I want to move up here. Zuhair Nakvi, I haven't seen you in a while, man. Thank you for the 5 Aussie. He says, my case for a market cycle bottom is the reaction from the weekly 377 on the BLX index. My views. Luckily, had a forgotten long order there. Yeah, I mean, the 377, that's pretty popular. I mean, Crown uses that. That's really important to Crown and some other traders. I've never really looked at the 377. I've never used it in a system. I've never really tested it. So I don't really have any views on that particular importance of that particular importance of a moving average. You know, again, as with all things, I don't think that it's magical. I think that it can be important if used properly in a system, which it seems that you have. Again, you're looking for a particular reaction off of it. You're not just going to be blind buying it. So that's cool, man. That's cool. I don't have any particular views on that would be helpful, but I really appreciate the tip, my friend. Jason Sowers, thank you so much for the sub on YouTube, my friend. All right. Sorry, one last thing that I wanted to point out here with the 55 MIMA. Now, we did struggle with this for about 6 weeks, a little bit longer, honestly, about 2 months right here. You can see we struggle with it. And the resulting recovery did kick off the bull market of 2019. So again, large movements, large volume on higher time frames. That's what we want to confirm that the bottom is in, not price going lower. Now, I do not recommend trying to catch the bottom with your trade. You should buy the initiation of a trend on the breakout. So again, sitting in cash and staying hedged is still the safest option at this point in time, right? Now, macro fundamentals to consider, right? As I said, when we talk about the pandemic, the death toll is still yet to make an impact in America. It is just, it is starting to ramp up in the Eurozone. Again, Europe is going to be a little bit more different than America. They are a much more densely concentrated population. They also have the Eurozone, particularly has open borders policies throughout most of the Eurozone. This again, depends on where you fall on the topic of open borders politically, but it is certainly not a good thing for corralling the spread of an outbreak. Okay. America has more restrictive bans. Obviously, we instituted a travel ban or a flight ban from China and other high infected areas in January of 2020. We've declared a national emergency now. There are restrictions on interstate travel right now. And again, kind of the difference, obviously, between America and the Eurozone and why I think the death rate will actually be different just mathematically is because America is a far more broader region, right? With far less dense populations. Obviously, as always, more dense coastal populations on the West Coast and the East Coast will be particularly hit relatively hard. It's possible that situation will look probably not as bad as highly populated areas like we've seen in Italy and France now, but something on that level. Whereas the Midwest and the majority of the heartland, the majority of the center of America, which is far more less dense, much less dense, more spread out over a exponentially wider area of land, will not see the same sort of fear and panic. And also similarly, I mean, we're already doing things like going into self-quarantine. Businesses are already shutting down before we're actually seeing a lot of deaths, right? Whereas these things are not being done in the Eurozone until now, after the death rate in Italy and France is already pretty high. So there is a qualitative and quantitative difference here when we look at the effects. So again, this thing will wreak the havoc that it is going to wreak, and we will see it end. So again, my overall fundamental here is that this is not going to destroy the world, but the market. Let's take a look at how the market has responded to this. Let's go over and look at traditionals, right? So again, we can see here that the S&P E-mini futures shut down following open, right? Because they triggered the circuit breakers and shut down until the New York Open. As soon as the markets opened at opening bell this morning, we can go look at the SPY, for example, for that. We can see here that as soon as the markets opened up, right, they gapped down about 10%, right? Now we're currently having an up day, but we've rejected from our previous level there. Actually, it's more fair to say that we retested the level of the gap on the E-minis, on the ESs, and sold down from there. And Bitcoin did the exact same thing, right? So this is what I was watching last night. I stayed up to watch this. As soon as I saw the market, we saw this. We saw this last night in BTC. So let's go look at BTC. Let's go look at the lower time frames. We can see the pump here on the announcement that the Fed was going to say something. And then as soon as they said they were going to slash rates, we can see the Bitcoin market move down simultaneously with the ES. The ES market did the exact same thing. Let's see where we opened. All right. So we gapped open and immediately sold off. We limited down. Right. And this is a terrible thing to see. This is I mean, I don't know if anybody was watching the depth of market on the ES futures, but there were no buys. There were literally no buys. There was two, double digit, 2,000 sitting on the ask side and like 5 orders sitting on the bid side. It's ridiculous. It's not what you want to see. Not bullish. Not bullish. So last night I had, before I went to bed, I was 50% hedged and I had about 2% long exposure. I closed my longs. I went fully hedged in Bitcoin. This is how I personally played this. Once I just saw this, it's exactly what I did. I wanted to go to bed, so I fully hedged. And woke up this morning, sat down at the computer, ended up closing my hedge down at the lows, sat spot long for the mounts. I just recently re-hedged as I saw the market reject exactly from where we limited down from, essentially, right? We've come back up to retest that. If I see us reclaim that level fairly significantly, then I will consider I'll consider modifying my position. But again, I want to be very, very clear here. I've been doing this for a while and I'm handling this relatively agilely like a ninja to the best of my ability, not just for myself, but also for the group members. And those who are trading their own system, trading their own strategy, should just remain hedged or sitting in cash until we have a confirmation that the bottom is in. What is the confirmation that the bottom is in? It is again, you should develop your system for this, but it is a significant move into the upside on high volume with a strong candle close. It's a good indication that the market bottom is in, right? And we do not see that currently. All right. And essentially, what would the setup be currently right now for somebody looking to go short? It would be something like a swing failure pattern, right? We've had a significant sell-off from a current level of resistance. Order books are fairly thick, right around 5,100 right now. You can see that over in sensor charts. We can see that the hourly trend is still to the downside. We have not gotten above a significant moving average here on the lower time frames. We can also see volume dropping off as price is moving up. The most significant level of resistance coming in here is we have about 100 BTC sitting at 5110, 139 at 5210. The most significant resistance really not for macro, but for the range that we're currently sitting at is 5,500. And then we have books stacked between 4,500 and 4,000. Okay. But I mean, the market going limit down following the Fed cuts is a terrible sign for bulls. Like I said, it's like seeing your favorite fighter KO'd in the first 30 seconds of a match, right? So again, long-term, getting back to kind of the pandemic here. Long-term positive factors for our life, China coming back online economically, South Korea flattening the curve of outbreaks, America taking extreme measures, but Europe lagging behind as they did not act preemptively, right? So the EU will continue to be hit hard. America will have to deal with the outbreak, and it's not clear yet whether we've taken enough measures to flatten the curve significantly, but schools are closing and public events are being canceled, and these are good things for containing the outbreak, but not good things economically because people will have less disposable income in the short-term future, right? I do expect things to get worse before they get better. Bitcoin is being set up for a very macro bullish narrative, but that will take time to play out. Investors have to be convinced to move the cash that they pulled out of the cryptocurrency markets back into the cryptocurrency markets. So long-term investors and those looking to get a good entry on Bitcoin, this is the time to start dollar cost averaging into Bitcoin. Traders just need to be patient and rely on their systems that they have developed over time. Again, trend following traders are going to be waiting for the first initiation of a trend outbreak. Right now, we haven't seen that, right? Nothing that we can say on the lower time frames is going to do this. Now, as I said, I was looking for a potential bottom come the end of March, early April, based on the Fed rate cuts. We have not gotten that. The market has reacted contrarily to that, right? And again, not what I wanted to see, but something that will go ahead and trade. As a trader, I will follow the actual direction of the market. It doesn't matter what my opinion is. It matters what price actually does. This is what being a systems trader does. This is what being a trend following trader means. Current price and only price is the actual denominator of which direction to trade in the market. Okay. So we will see. We'll see. Should we, I was expecting that stimulus would cause a 1 to 3 month market recovery, and then we'd kind of have to see from there. I'm still going to tentatively look for that. But as we look right now, we can see that the bottom is clearly not in. So now let's look at the rest of the market. So we went over our important Bitcoin daily levels. Let's look at the 4 hour here. Now, the 4-hour is kind of interesting here on Bitcoin. Now, the 4-hour actually broke the initiator to the upside over here and did set you up for a profitable TP1 trade right here on this movement to the upside. We closed below right here, tested the baseline for a reversal baseline bounce entry right here. Did get the short entry right here, though, from Minx, so that was a decent signal on the 4-hour. We are getting a take profit short signal from the 4-hour, right? So the 4-hour is essentially telling you to be flat, right? Because it is telling you that 4-hour momentum, meso momentum, has shifted, but we don't really see any positive movements here. We haven't broken any significant levels. We are below the continuation filter. So the 4-hour does essentially have you being flat because the daily trend is bearish. So we should be looking to trade in the daily trend. It's possible that we do see, the 4-hour would potentially be hinting that we have a little bit of upside here. The hourly as well, recently breaking above resistance. So essentially, again, this is kind of similar to where we were at. The hourly over here had a nice sell-off, again, indicating for basically the hedge and the short right here, actually, interestingly enough. Nice resulting sell-off. We've come back up and have indications to exit that position, which is essentially what we did. But we exited down here and we reestablished our positions down here, which I still believe is the absolute safest thing to do. Wendy22 is essentially asking if the pattern day trader rule applies to futures markets, and to the best of my knowledge, it does. All right, let's look at traditional markets. Oh, sorry, let's look at the rest of the cryptos here. Ethereum currently trading at 112.60. Ethereum needs to close above 202.34 on the daily time frame to regain the bullish trend. We need to close above 137.50, 137.49 on the chart to invalidate short positions at this point in time. Minx throwing up a take profit short signal on the current candle, recommending that one should be flat and hedged or sitting in cash on their Ethereum position. Parallax recovering from oversold as well. Again, these are reversal indications. Parallax recovering from oversold, and Minx doing a noise cross, Minx crossing the static and oversold territory. These are reversal long entries. Ironically, we got one yesterday on Bitcoin, but we're not looking to catch the bottoms on these trades. Or if you are, what I've noticed with this is that a DCA strategy is best with this, right? We don't have any other factors right now. No bullish divergence, nothing like that. Thank you very much, Boris, for the clarification on that. It does not. Mr. Wendy. All right. XRP needs to close above 20 cents to regain the bullish trend. Closes above 16.4 would invalidate shorts at this point in time. Our second TPS signal from Minx, again, reversal long signal or exit short signal. one should still be hedged or sitting in cash for XRP. EOS, a similar story as well, as the markets all move in tandem here. Close above $2.86 would revalidate the bullish trend, but we are not there yet. Closes above $2.18, really $2.19, would invalidate shorts at this point in time. Minx similarly signaling for a take profit short on the previous candle after signaling for the primary short on this candle with confirmation on this candle. So pretty good move. So what the daily time frame here seems to be suggesting for Bitcoin, EOS, XRP, and USD, at least what Minx would be suggesting, is that one is best positioned by exiting primary at-risk shorts, higher time frame primary at-risk shorts, and sitting hedged or in cash. Similar for Litecoin, similar for BNB, similar for Cardano, and we're not really looking at OGN anymore. Looking at the SPY. Again, SPY is still very nasty after the gap down today. Nothing new under the sun, as they say. So the SPY needs to close above 268.70 to invalidate shorts at this point in time, and we still need to get above 297.21 to validate the bullish trend. Or excuse me, to validate the bullish trend, to invalidate the bearish trend. To be bullish on the SPY, need to close the daily above 297.22. NB asks, when I say hedge, what does it mean? So it means that if you are long, you should have a short position to put you flat. That is the only way, in my opinion, to successfully hedge. Of course, there are other broader definitions of hedging, such as holding to, uncorrelated assets. But here's the thing, everything is tanking. So there's not a whole lot you can hold. You have, at some point in time, and the way that I have hedged for a long time is always using short selling to cover my spot long positions. That's the way I've always done it. So it doesn't really matter whether you're, like, for example, I'm using SH to hedge my my blue chip dividend portfolio right now. And I'm using SPXU to speculate on the on futures, the future of the S&P, and SH to hedge, right? So when I feel that the market is invalidated that, again here, if we close above 268.70 essentially on the SPY, then I'll close that position. I'll reallocate those funds to stocks. Your Mink still bearish, Wadatar still bearish, Parallax still bearish. No exit on the SPY so far, guys. Qs are going to be no different. Closing the Qs above 192.33 will invalidate shorts. Closing above 210.12 will make the daily trend bullish again. We are far from there. Far from there. Looking at Minx, we are oversold and just coiling. Parallax is bearish. Wadatar is bearish, of course. It's kind of funny to see everything moving the same way. Everything moves along with Bitcoin and crypto land. Everything moves along with the SPY and stock land. Looking at the eyes, which is the Dow ETF, similar thing. Let's look at the numbers here. Again, need to close above 131.75 to invalidate the bearish trend or the bearish short. We need to close above 147.20 to get long. Everything's still bearish. Should make no surprise. Gold spot continuing to dump. Silver spot continuing to dump. Let's go take a look. Now, we talked about this candle being a little overextended. Those who were aggressive and took the gold short have made a good profit off of it, being multiple TPs from Quadrigo. No exit signal so far. Minx is oversold. Watch for that recovery back into regular territory to be flat on the gold trade. Silver, on the other hand, was a good short to take. Talked about that when it happened. Got Minx giving a continuation short signal here on the 10th. A continuation filter giving one on the 11th. Wadatar confirmation all the way down. Minx is oversold, as I said. Wait for that cross back into recovery to get the TPS signal. Nothing so far. So beautiful silver short trade so far. Sorry, let's talk about numbers. So silver's got some work to do. Silver currently trading below $13. We got to get back above $16.24 to invalidate shorts. So I would be patient, guys. Be very patient on markets right now. Bentley crude taking another massive decline to the downside. Another 14% down on Bentley crude. Let's look at DRIP. DRIP, however, not responding as I would like it to. Some big volatile movements here, but again, DRIP moving to the downside. This is the inverse ETF. This is the Bear 3X ETF on oil. And again, the CFD is continuing to move down, but the ETF, the inverse ETF, continuing to move down as well. So again, as I said, DRIP trade was one of my best ETF trades this year. Took profit on the 9th as soon as the market opened up. Again, I don't think there's anything to do here, but let's take a gander. DRIP coming down to the baseline, to the daily baseline, indicating a potential reversal baseline bounce. I would actually be watching DRIP to see if we can't get a long signal on oil, right? Again, big fundamentals, but with oil trading at $30, some people calling for $18. The oil market very, very bearish. Let's look at Bentley crude. We need to close above 36.50 to invalidate shorts. We need to get back above 44.65 to be looking for longs. Minis continuing to drop. Again, what did we see this morning? From traditional futures, limited down on the news of the Fed cut as soon as pretty much as soon as the markets opened up, and then trading suspended as the circuit breakers were tripped on futures, and then as soon as they were resumed, gapping down with the traditional markets at the New York Open, trading suspended, rising back up to retest the gap to fill the gap, as you will, and rejecting. The Russell falling off, the Dow falling off, the NQ falling off, the SP falling off. This is the ES, actually. VIX up at 77.51. Yes, ridiculous. Euro dollar struggling as well, having a big sell-off. Again, kind of currently coming up. I don't really have a strong opinion on the euro dollar right now. Gold spot struggling to find its local low on the daily. All right. Talk about upside targets and downside targets. We've got range highs at 53.44 and 56.62. Show you what those numbers are here. Let's go to the daily. 53.44 daily open, 56.62 current range high. In my opinion, I'm taking those wicks out of there. That's stop loss, but current level of significance and order book depth. 43.98 current daily low, 37.30 current range, current market low, current yearly low. So areas to watch. Here on the LTFs, potential SFP forming, putting in this nice high and some good selling pressure. Looking over at tensor charts, again, we have selling pressure coming in at 51.10, really significantly at 52.10. Here on the hourly, we can see again, significance up at about 5,500, significance down between 4,500 and 4,000. So again, daily trend being bearish, I would be biased to look for shorts. Pop-ups into the $5,500 area, pop-ups into the $5,300 area, I would look for potential opportunities to short the market down. Crypto, Pepe Sylvia says 5.2K to 3.2K. Any foundations in this range? High frequency and data point support versus resistance. I am not sure what you mean, my brother. This is historically, so, let me touch on this to the best of my ability. So 5.2K to 3.2K is historically a very important area for Bitcoin. This is where longs are typically accumulated for the long hold, something that I have advocated for individuals looking to build a long-term spot position or very low leverage position in Bitcoin. It is a good area to accumulate slowly to dollar cost average into one. Why is it necessary to dollar cost average into one? Well, for spot positions, to reduce the volatility and to kind of get the idea that you're going to catch the bottom out of your head, because that is the most important thing when looking to establish a long-term position, just to get the idea that you're going to catch the bottom. Just get it out of your head. You're not going to do it. It's already impossible. Just average in, right? And for traders utilizing leverage, the reason why it's absolutely essential is because you're likely not going to time the bottom perfectly, or even probably very well, being very honest. And the risk of liquidation becomes very clear, because one thing I want to be very, very clear about is, for those who are trading right now, right? My traders, everybody watching, price movements are magnified very significantly right now compared to where price was a month ago, right? So a dollar is moving twice as much price right now, right? A dollar, pound for pound, every order is moving the market far more significantly. So be very careful in confusing volatility with meaning, right? There's a difference between volatility, price moving up quickly and down quickly, with actual fundamental trend meaning. Trend is identified on the higher time frames. That's why I say, even when we look at charts like this, what we really need to look for the information on what direction do we trade, we need to look on charts that look like this. And we need to bring up indicators that look like this, right? These tell us in what direction to trade. And then if you are savvy enough, charts like this can tell us when to trade, if that is your strategy. Blue Block's Territory saying to hedge, add up your total quantity of Bitcoin and divide it by what you have on the exchange, and use that number as leverage to cover your account. Just make sure it's a low leverage so as not to get liquidated. Very good explanation, Blue Block's Territory. On Bybit, you can simply go to the Assets tab and just take the total quantity of Bitcoin that you have times the current market price of Bitcoin. And that is the amount that you need to hedge. Good explanation, my friend. All right, so with that being said, we have let's take a gander here. All right, with that being said, guys, let's check in with Zuhair Nakvi asks, how likely are we to hold 5,300 and have a bear trap? I mean, just as likely as we are to break 5,300 and bull trap, I guess, you know, pump to the upside and bull trap. There's as I said, right, you know, trying to plan the market out via technical analysis is not my strong suit, and in my opinion is probably not anybody's strong suit. I'm a systems trader, right? So when the trend establishes that it is bullish by breaking the baseline, putting in volume confirmation, putting in initiation confirmation, well, then that's my signal to go long. Timing the bottom is, it's tough, man. It's tough. And, you know, in either attempt, right? In either attempt, I guess the question is like, how would you know until after the fact, right? Like, you know, how valuable is that? Because, you know, let's assume, you know, that question implies that there is an idea that 5,300 is the level where, you know, is a kind of our fair market value right now, right? And so movements to the downside are to be accumulated to the long side. Well, if that's the trading thesis, then that just needs to be held and accounted for. We just need to manage our downside risk, right? Just as with anything, right? You manage your risk, you set your risk percentage, you identify exactly how much of your account you're willing to lose on a trade, and you take that trade, right? Everybody's going to have their own unique trading strategy. Emma, I'm not a big video game player, but thank you very much. I talked about that earlier, right? I talked about, you know, being kind of disappointed by seeing a lot of analysts on Twitter, you know, talking about, hey, what video games is everybody playing now that we're quarantined? I'm trying to figure out how many Pine scripts I can put out this week on self-quarantine. Could we see another sell-off in Bitcoin within 24 hours or less? Yeah, absolutely, man. The trend is bearish, right? When the trend is bearish, it's more likely for price to go down. And the market is highly volatile. All right, guys, I'm going to check in with, I've got junior analyst Jason on the line. Let's check in for a Bitcoin weather report. Jason, what's the weather like out there in Bitcoin City right now?
No, that's what I told him. I told him that. Yeah, we're going to push it up about 12.2 and then let everyone know that we're feeling bearish about it. And then let's pump that shit up to 14. You know what I mean? No. Yes. No. Yeah. Oh, hold on. Yeah, things are looking super bearish, man. Super bearish. Get your shorts on. Yeah, they're a bunch of idiots. No. Yes. All right. I love you. And back to you, Justin.
All right. You guys heard it here. You guys heard it here first. K-Smooth7, thanks so much for the sub on YouTube. Hey, guys, we're going to take a brief break. When we come back, the latest in news, our take on news. We're going to be talking about a lot. We're going to be talking about the Fed cutting rates to zero, the International Monetary Fund response to COVID-19. We're going to be talking about Bakkt and their newest Series B funding range, and we're going to go a little bit more in depth on the liquidation and the crash to Bitcoin, the crash on Bitcoin to 3.7K. Of course, we already touched on that a lot at the beginning of the show as I broke down kind of the narrative around BitMEX and the liquidation engine, but we'll go into some of those details a little bit more. So we'll be right back, guys. Don't go anywhere. Fantastic time to grab a coffee. Fantastic time to do some squats. Get those calisthenics in, guys. Of course, if you are watching on YouTube, regardless of where you're watching, if you enjoyed the content, make sure to subscribe to the channel, turn on all notifications. We are here every single day, and we post exclusive content multiple times a day on this channel. But if you're not subscribed without notifications, you're not going to find out because YouTube is not going to tell you. It's not going to tell you. After the show, leave a comment down below if you want to weigh in on what we should cover in our next episode. If you want to tell us what you learned, we always appreciate the user feedback. If you're watching on Twitch and D Live, feel free to drop us a follow or consider using Amazon Prime to subscribe to the channel for no cost to yourself. And of course, you can follow us on YouTube or Twitch and Instagram. Getting better at this. Where we post exclusive content that you will not see anywhere else. Just on Twitch, just on Instagram. All right, guys, we'll be right back. Don't go anywhere. All right, guys, we're going to start off the news today talking about the Federal Reserve cutting rates to zero, of course. So the big news from the previous evening, as many of you have already heard, was the Fed moving to cut rates to near zero. And I just want to point out the ridiculous advertisement size here on CNN. This is obscene. as well as announcing a purchase of another $700 billion worth of treasury bonds and mortgage-backed securities. Now, this was a surprise move announced ahead of the Monday open, as market turmoil was already building steam in the pre-market trading late that evening. Again, the implied open was down 5%, and we saw the futures limit down as well. And after the Fed slashed rates by March 3rd by 50 basis points, it was widely expected they would cut rates again following their upcoming meeting this Wednesday, but the central bankers intervened early, cutting rates all the way to the bottom, something that we have not seen since the 2008 financial crisis, and they canceled their Wednesday meeting in the process. As for what was behind the emergency move by the Fed, Chief economist Mark Zandi over at Moody's Analytics said the following: "I don't think they would have done this unless they felt the financial markets were at significant risk of freezing up tomorrow. They're very concerned the financial markets simply will not work." Now, Nadeem Aslam, he's a chief market analyst at Avatrade, said the same thing. "The world is facing a pandemic situation, and for this extraordinary time, we need extraordinary measures. The Fed cutting the interest rate to zero and restarting their QE package is a nuclear bazooka of financial interventions." Now, the move to ensure liquidity remained in the markets has done so far very little to ease the nerves of investors, with fear of a prolonged recession on the table for many. And markets have stumbled again this morning despite the Fed's unprecedented stimulus. Indeed, it seems that investors are worried that between the Fed's actions as well as those by the central banks of Japan, Austria, Canada, England, and elsewhere, that we may not be, this just might not be enough for companies facing a sharp slide in demand. Now, Kit Jux over at France's Societe Generale put it this way, that the central banks threw the kitchen sink at it yesterday evening, yet here we are. There is a great sense that central banks are going to get to grips with the issues of getting money flowing, but the human problem, the macro problem, is that there is nothing, the human problem, the macro problem, there's nothing that they can do about that. And of course, it's my personal opinion that listen, the Fed has been almost fundamentally wrong on every significant economic event. They're always either too early to act or too late to act. And this is an example of them being far too early to act, right? Now, I understand why they're doing what they're doing, because they are afraid that the markets will plunge significantly worse. Now, you cannot stop market panic causing people to sell, right? But what you can try and do is inject enough liquidity to slow the ease down. That's what they're attempting to do. Ideally, the better time to do quantitative easing or cut rates is after the market has bottomed and is on the way up to speed up the recovery process. They are in full panic mode right here, trying to stop the bottom falling out entirely. And then, of course, there is the matter of the International Monetary Fund stepping in with its own financial intervention, as it announced earlier today that it stands ready to use up to $1 trillion in lending capacity to assist countries around the world struggling with the economic fallout of the COVID outbreak, saying that as a first line of defense, the International Monetary Fund will be deploying a flexible and rapid disbursement emergency response toolkit to help countries with urgent balance of payment needs. This according to their managing director, Kristalina Georgieva, stating that this morning. Now, the International Monetary Fund already has 40 ongoing arrangements, both disbursement and precautionary arrangements, and with those commitments totaling about $200 billion. Now, in some cases, those arrangements can provide another vehicle for the rapid disbursement of crisis financing, basically saying that there's already a gateway to dispersing these funds to countries at risk or in need, and this allows them to just add additional funds in without a lot of delay. Now, writing on the IMF website that the lending is going to be used to aid their members, especially emerging and developing countries. And she said their Catastrophe Containment and Relief Trust is designed to help the poorest countries with immediate debt relief, which will free up vital resources for spending on health, containment, and mitigation. Now, the fund is already said to have been tapped by 40 ongoing loan arrangements to various countries, with combined commitments, as we said, of about $200 billion that are being used to provide immediate crisis financing. And there are currently about 20 or more countries vying for support via this program. Now, turning to Bitcoin, of course. Amid the market downturn that has seen Bitcoin slide 50% from this year's high of 10,000, some still seem quite positive on the future of the cryptocurrency and Bitcoin industry. Not just myself, but Bakkt, announcing a Series B funding round, stating that their Bitcoin futures platform has raised $300 million from several investors, including its parent company, the Intercontinental Exchange, Microsoft's venture capital arm known as M12, Pantera Capital, among several other outfits. Now, back in 2019, of course, Bakkt rolled out their physically settled futures markets for Bitcoin, along with an institutional custody platform known as the Bakkt Warehouse. And as we've been covering in our reporting in recent months, Bakkt is now looking to take digital assets to the mainstream by focusing on consumer products and services to be delivered through their upcoming Bakkt app. Users will be able to convert a wide variety of digital assets into cash to make reward points, in-game assets, merchant stored values, and cryptocurrencies more accessible and easy to spend. And according to Bakkt, these assets represent $1 trillion in consumer spending power. And its new app will allow users to combine their rewards, miles, loyalty points, Bitcoin, and crypto into a single digital wallet, saying that just with a few taps, you can use these assets to shop at your favorite stores, send remittances to family and friends, or convert your assets into cash. They believe that you hold more value than you realize, and they're here to help you track, spend, and send their assets however you want. Now, they acquired Bridge to Solutions to pull this off. We also reported on that a few weeks ago. Bakkt CEO Mike Blandina says they're now powering the loyalty redemption programs for 7 of the top 10 financial institutions in the United States, as well as over 4,500 domestic loyalty and incentive programs. And the company adds that it is well positioned to leverage the technology and infrastructure along with the right partners to deliver innovative new products that expand access to the global digital economy. So essentially the killer app that everybody's been asking for. Now, the Bakkt app is scheduled to launch this summer, and it may arrive just in time for users stuck indoors in a quarantine lockdown to ground the economy and human activity at large. Perhaps it would be an ideal time for people to embrace a new digital economy from the isolation of their homes, with modern telecommunication being the only means to venture out into the wider world. So what do you guys think? What do you guys think the long-term ramifications and effects of the quantitative easing spending will do? Is this going to make market bottoms? Are we going to be seeing the 1 to 3 month market recovery coming into the beginning of April, the end of March? Is the IMF going to have any effect, or is it going to have a negative effect on developing nations around the world, as so many would argue that their policies do? And is the Bakkt app really all it's cracked up to be? Is it the new killer app that will bring cryptocurrency to the mainstream, or is it just going to fizzle out and die like so many other failed cryptocurrency projects? Please let me know in the comment section down below. You'll be able to comment after the conclusion of the show. Just wait a few minutes and be patient, or let me know in the chat. Now, with that being said, let us go to the Q&A segment to see what your guys' thoughts are and to answer your questions briefly before we go ahead and pop on out of here. I also want to do the chest over on DLive for our DLivians holding the house down. All right. So Insomix asks, what will happen when only miners in China are profitable after the halving? Will that not make the network centralized? So currently about 65% of the hashing power resides in China. Okay. We also have, kind of stretching beyond that, we have significant mining operations in the Ukraine and Russia, with the rest distributed around the United States. Obviously, the United States having about 10% of the hashing power, Canada and some places in Europe. Iran has a bit of hashing power as well, I think up in the 2 to 3%. 2 to 3% area right there. So mining is already to a degree geographically centralized in China. And this has never been an issue because the difference between centralized, geographically. So let's say, you could say that the world economy is centralized in America. but there's lots of competition because it's a free market, right? So not all the miners are colluding is the issue here, right? If all of the miners were to get together and form a, kind of a large collective where they would strip the profit incentive from each other, then, that is something that we could potentially be concerned about. But currently, they are all in fierce competition with each other. And the nice thing is, just as Satoshi developed the blockchain in the first place, the proof of work system to begin in the first place, any intervention on the miners to disrupt or pollute the network is a direct economic disincentive from them, because we have the right as the network participants. Everybody puts all this power in the hands of miners, and certainly they have a lot of power, but it is the users and the client providers who also have a ton of power. It is a trifecta: miners, wallet developers, and users of the network, right? To where we can fork off from them. We can even implement drastic measures if we wanted to, such as ASIC resistance. But of course, that would significantly change things moving forward. But of course, we can isolate the hashing power from individuals that are there. What I honestly think we're going to see is, I think that we are going to see investment capital from well-capitalized nations like Europe and America step in and fill that gap and provide direct competition. We've already covered mining being in big trouble in China. And currently, we have to understand that with price below 6,000, very few miners, not very few miners, but small operations are starting to feel pain, right? Miners are marginally profitable. Old S9s, depending on exactly where price is below 6,000, between profitable and unprofitable. All right. It's really only the more, below 6,000 significantly, it's really only the most, the more advanced ASICs that are highly profitable, like the newest lines that have been put out by BitMEX and the leading, ASIC manufacturers. So your question here is, what will happen when only miners in China are profitable after the halving? Well, again, the reason why mining is profitable in China is due to the low cost of hydroelectric power. However, there are still currently, even without price dropping, China mining was already in slight trouble because of the disruption of the supply chain, and price moving to the downside, exacerbating that, making old mining rigs unprofitable. So I think that what we are likely to see, especially in the lens of an economic downturn, is the same thing you're going to see in any other industry. The outfits that are most capitalized and have the most reserves are going to be able to weather the storm, and smaller outfits will not. And then there is going to be a vacuum, an opportunity vacuum for newer investors to step in and fill that bridge. So again, the way that Bitcoin is specifically built is to disincentivize people from manipulating the network for their own financial gain, because just because they have the mining power, the right still exists on chain to exclude that hashing power, right? We can always hard fork. So again, I don't really feel that this affects the security of the network. Mining has already been regionally localized in China for quite a while. I think that's a little bit different from mining centralization, where that is the risk of getting the majority of the hash power in smaller and smaller and smaller outfits. Now, that's what we should be currently concerned about right now. And so that's the alternative to that, is seeing from the free market competition come in from, it doesn't matter whether it's not in China or not, right? Mining has existed locally, regionally centralized in China for a long time, and the network's been unaffected, right? Because it's in those miners' economic interest to not cheat, just the same as it always is, right? This all relies on the underlying proof of work algorithm and the disincentive from the network, the game theoretics that make it unprofitable to cheat the system, right? So let's say, and Andreas Antonopoulos covers this very well. What would ever happen if somebody were to gain 51% of the hash power and start rewriting blocks? Well, anybody that was not them would simply hard fork, kick them off the network, and resume process as normal, right? Wallet software would be updated, and you would see a temporary downtime, right? You'd see a temporary downtime. So, the answer to this is the answer to this is competition from the free market, as it always is, right? And I think that is what will happen. Let's see here. Ron Legato asks, do I have any words regarding the repo market? He has also heard that some regulations regarding reserves as they relate to new loans have been relaxed. That is correct. Regulations on reserves as they relate to loans have been relaxed. I'm going to be covering the repo markets coming up later this week, so I'll pause my commentary on that for then until I have a better write-up and I can speak from a more prepared point of view. But I do have some thoughts on that moving forward later on in the week. All right, big winners from the day over on D-Live. Robin from the Hood, Ricky T, the Pie Guy. Can't really see. Valcornex and Dark Rico. Thank you guys so much for tuning in over here on D-Live. All right, guys, with that being said, we're going to head for the door. Thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. My name is Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. I hope you guys go on to have a fantastic rest of your day. And again, I want to be very, very, very clear here. I have a very positive sentiment for the long term looking forward. Please review the beginning parts of the video, as I said, as we descend into lower price levels. Again, this becomes a good opportunity for long-term thinkers, for individuals who want to develop long-term positions, to begin DCAing into the market. Do I think the bottom is in? I really don't think that the bottom is in. I don't think that the bottom is in on equities. I think that we should be looking, as we are in a bearish trend, for price to continue going lower. And when is that invalidated? When we invalidate that trend on higher time frames. Nothing that you're going to see on a 15-minute chart or an hourly chart is going to tell you, based on any kind of chart pattern, that the bottom is in. That is speculation, and that is reading the tea leaves technical analysis. True bottom invalidation comes when you know the bottom is in, is whenever you form the bottom and the market begins to rally to the upside. And you can confirm that and validate that with confirmation on higher time frames with a far higher probability of success than any reversal strategy, in my earnest opinion. So watch the higher time frames, watch for confirmation, stay safe. Traders should be hedged or sitting in cash if they're conservative and new. And long-term investors should be not selling anything at these lows, not panicking. And those who are on the sidelines looking to accumulate a position, I think that you guys are looking at very good bargains. With that being said, if you guys enjoyed the content, make sure to leave a like on today's video. Subscribe on YouTube if you're not. Turn on all notifications, because otherwise they will not tell you when we go live. And we are posting exclusive content here multiple times a day. You guys can also follow us on Twitter and Instagram. We post exclusive content that you will not find here on YouTube or anywhere else on the live stream. We will be back tomorrow at 12 p.m. Central Standard Time for another episode of Breaking Bitcoin Market Analysis. Make sure to join us in the Discord to stay up to date with the latest and talk cryptocurrency. Yeah, it's pretty cool. I was looking at the Discord rankings lists, and it seems like our Discord is really ranked up there pretty high just for all the bots that we have and the features that we have just in the general Discord. So that's really neat. So make sure you guys go check that out. Love to be in there. I'll try to be in the general voice as much as possible, as well as in the members lounge. I look forward to the community mentoring session this Wednesday for premium, professional, advanced, and elite members. If you guys are beginning your journey toward trading and you guys would like to take advantage of our educational content, our premium indicator suite, our proprietary signals, our community, everything that comes along with membership, make sure to check out everything that we do at premium.crackingcryptocurrency.com. Again, we'll be back tomorrow at 12 p.m. I want you guys to trade safely, be awesome to one another, and take advantage of this opportunity. As I said, Isaac Newton, William Shakespeare did some of their best work while in self-quarantine from a plague. We are seeing a situation that is not so different here in the modern era. Take advantage of this opportunity. Take the self-quarantine, take the isolation, learn a skill, emerge from this a better, stronger, faster, smarter human being, human person, become a better trader, a better investor, develop discipline, do your studying, turn off the video games, and use this time and opportunity to grow and profit in the long run, because that opportunity will come. This is not the end of the world. This is just temporary setback. All right. So go forth and prosper, guys. And I will see you guys tomorrow at 12 p.m. Central Standard Time. Be good.